Well, hello, everyone. Thanks for joining us today. Really looking forward to our conversations and a good conversation. Today we're going to be talking about crises, which I think is probably something that all of us are thinking about these days, and we think it's an important topic. And we know that many of you on this call either work for or work with financial institutions that are really grappling with the challenges of COVID-19. And we were thinking, what's a better way to deal with these challenges, and to hear from some people that have gone through them, right? Have either gone through them as leaders of a microfinance institution, or as an actor in the ecosystem of microfinance. So today we have a great panel to talk about three specific experiences and how they grappled with those experiences, and the lessons learned. So I'm really happy to have with us Sisalam of Vitas Palestine, Mr. Srinivasan, who will be speaking to us about Spandana, has lived through many, many crises, but big crisis in India. And then Daniel Rosas of the European Microfinance Platform, who will be speaking with us today about Viator in Azerbaijan. I'm going to let each one of them introduce themselves, but before, I'm going to turn it over to Daniel Rosas to give a little bit of a background about why these case studies, a little overview of the initiative. This is actually looking a little bit from the past and bringing it to the present and the future. So I will turn this over to Daniel. I will also like to encourage all of you, if you haven't had a chance, to take a look in the chat box for the link to the case studies. It's a summary of the case studies, so that you have a quick idea and a quick read of what the three experiences are, if you haven't had a chance to look at it to date. So for that, Daniel, welcome.
Thanks, Deborah. Hello, everyone. Just a brief introduction about me. I actually started in microfinance about 10 years ago. And one of the very first things I did was a paper on weathering the storm. This was pretty much one of my first consulting assignments. So I've been dealing with MFIs in crisis ever since I started in the sector. And it's been particularly interesting how this year, that paper seems to have been found by a lot of people, and folks have been reading it and sort of finding value in learning, okay, here are these examples of institutions that have gone through crisis, and what can that tell us now? And so that got us talking to Deborah, talking to others at CFI, talking to others at European Microfinance Platform, where I've been working for the last several years, to see, is there more that we can do? Can we look for maybe more relevant examples that would really inform institutions and investors and others in the sector of what to expect, what lessons they could learn from. What we have tried to do, in fact, so we tried to say, okay, can we look for institutions that, in the past several years, going back as much as a decade, have gone through really severe crisis, and where that crisis was not of its own making. So it was not some mismanagement or some internal issues. In some cases, they may have contributed to the broader market, and you could argue that the crisis was affected by the market events, where it's just over hyper competitive, oversaturated market. I think Srinivasan will talk about this in the context of Spandana. But even so, I don't think there was a question that the institution itself did something specific that caused its own issues. And if you look back in the original Weathering the Storm, most of the institutions had dealt with something that was where they had a significant role in getting into that situation. So, and the other thing that we tried to do is we tried to look for institutions that really suffered quite substantial challenges. These weren't small things. They were dealing with very high par, with very high write-offs, and so we thought to really show an example of, okay, how can an institution go through a process where, as you'll hear from some of the examples, that may have had a par exceeding 50, 60%, and yet still survive and come through it and do it without necessarily, outside grants or something like that, but just kind of through its own resources. So you'll hear these examples as we go through them. These are the 3 of the 5 that are part of this Weathering the Storm 2 project. And I hope you will find it useful. As always, our intention here is provide lessons from the past in order to inform the present and the future. So, I hope you'll have lots of questions, and we'll do our best to answer them. Just on my own part, we had hoped to have Ainur Aliyeva, who's the head of Viator, join us, but unfortunately, due to the security situation in Azerbaijan right now, she just doesn't have the internet access to do it. So it's unfortunate, but I'll do my best to kind of present Viator's experience. Back over to you, Deborah.
Thanks, Daniel. Great. So what we want to do to start off today is obviously introduce our panelists. Daniel has given you his background, and we're really happy that he is on call. He's a very, as he said, he was the writer behind Weathering the Storm 10 years ago, and it's great to be working with him again. And I think there's a lot of lessons learned that will be useful to all of you. As Daniel said, we're really hoping to get comments and questions from you, telling us whether, for example, does this resonate? Are you experiencing something similar? These are all experts who really know a lot about dealing with crisis, both personally and also from just being involved in the sector. So please do encourage you to write in the chat box. But I want to start first and ask Ala Salam to introduce himself, give a little bit of background so that everyone knows who you are.
Thank you. Hi, everyone. My name is Ala Salam. I'm the General Manager of Vitas Palestine, and I'm the microfinance company, the chairman of the microfinance company union in Palestine too. I have more than 25 years of working in the microfinance sector and a little bit more in the financial sector in general. And I'm considered as one of the people who has strong experience in working under crisis, because all of the time we are living under crisis, actually. That's why we have strong experience on that. And I'm heading Vitas, which is considered one of the best performing microfinance institution in Palestine and part of Vitas Group too.
Great. Thank you, Ala.
Thank you.
And now I'll turn to Mr. Srinivasan. You want to give us some background on who you are.
I'm Srinivasan, a practitioner and consultant in development finance. I started off as a career central banker, and after about 5 years, I joined a development bank, National Bank for Agriculture and Rural Development. Spent 25 years there. Then I quit the bank and became a practitioner in all aspects of development finance. So Indian microfinance, I have been writing annual assessments for 4 years, state of the sector microfinance India. And it was in one of those years, the Andhra Pradesh crisis took place, in which one of the affected institutions has come up for the case study, which we will discuss today. Like Allah said, the microfinance sector also lives from crisis to crisis. It lives well in between, very well. When the crisis hits, there's a lot of problem. Then we try and bring it up. So what kind of factors contribute to crisis, and what kind of things can actually make these institutions cope with the crisis better? Are there absolute fixes available? This is also one of the issues probably we should debate today. Today I'll be talking about Spandana Spurti Financial Services based in Andhra Pradesh in India.
Great, thank you, Mr. Srinivasan. So we're going to start a conversation now. And I think that I'm going to ask the same question to all 3 of you, because I think it's important for sort of setting the stage and the context for our conversation. And that is, and I'll start with you, Daniel, could you describe the impact that the crisis had on Viator? And, and I guess, all of us want to know, like, how do you decide what to do first? So from what you have learned in your discussions with Ainur of Viator, how did they decide? There's just so many things you have to do at one time, and sort of who helped in those decisions. So I'll start off with you.
Sure, absolutely. So I think Viator's example is particularly interesting and relevant to today, because there wasn't like a single time when you say, okay, now we have a crisis. There are a couple of things that happened. And it really began with the devaluation of the local currency in beginning of 2015, which was about a 25% devaluation. So it's quite a large shock, but in and of itself, it was not yet catastrophic. And it then was followed about 10 months later with a second devaluation, which was another 30%. So over the course of those two shocks, sort of, over a period of close to a year, the currency went down by more than 50%. And accompanying underneath all of that was massive economic crisis in the country, as you can imagine when something like this is happening. So just to give a bit of context, Azerbaijan is a largely oil-driven economy. Oil prices were very low during that time, and all of this was propagating throughout the country's economy. So, and so Viator was basically trying to sort of navigate, okay, what do they do at each point? A lot of Viator's loans, as was true for a lot of MFIs in the country, were actually lent out in dollars, in foreign currency. And so when the devaluation happened, obviously had the scenario where the clients all of a sudden had very large payment shocks. And they experienced those large payment shocks exactly at the time when they also were experiencing job losses and reduction in income and all those kind of things. So this was not an ideal time to experience a payment shock where your payment goes up by 25 or eventually, doubles. And so what Viator did is a bit of an incremental response. The first thing they did as the first payment shock hit, within about 3 months of that, they essentially started decreasing their foreign currency lending. And by, towards the end of the year, it had come down to close to zero. So that by the time the second currency shock hit, the second devaluation hit, they're already lending entirely in local currency at that point. So that was really important. Another thing that they did, which I think set them up very well for kind of the responses, they tried to stay in contact with their creditors. And so they notified them of what was happening. And Azerbaijan at the time was one of the major markets for foreign currency, for foreign investors. So, your typical MIVs and DFIs and Viator had several of them, I believe a half dozen or so investors that were quite significant. And so they kind of were informing them of the situation, what was happening and what they were trying to do. And then the third step that they did, and that was already a full, I would say 15 months or a little bit over a year after the very first devaluation, they brought on board a consultant who was expert in crisis management. And she had actually worked previously in Bosnia during the Bosnia crisis that had happened about 6 years earlier. And so she came in to kind of assess their situation and give them recommendations on the type of lending they would do, and also on the collections. That is a big focus on how do they deal with collections on this point. One last thing I'll mention, and I think this is really a crucial element, throughout this time as they were facing very high levels of delinquency. So at one point you can look at their portfolio was about 70% of the portfolio was more than six months behind. This is huge in terms of impact on your payments. It's actually in many ways comparable to what a lot of MFIs are experiencing today. And one thing they did is they never stopped lending, and kind of in their communications with creditors insisted that no matter what, they wanted to make sure to continue redirecting whatever cash flow they were getting from the clients, because still some loans were paying, and to redirect it to continuous lending. It was much reduced. It was much lower volumes than before. And the new lending was also focused on a different type of product that they saw as much lower risk. It was basically mostly jewelry-backed loans, which was very common in the country, where people would save in gold and jewelry. And so these would be a way for them to lend. And what they found is at the time, many institutions, both MFIs and banks, were actually really stopping lending or cutting down a lot. And so there was real demand in the market for loans, and that's what they were able to do, and they were able to continue lending, and that actually set them up very, very well for kind of the next several years of the crisis. So I think that's the start. Hope I kind of explained it all right.
Mm-hmm. Yes, thank you.
Mm-hmm.
Well, let me turn to you, Ala, and let's get your perspective, or your story on what has happened and happened with Vitas, and to what extent you were able to know what kind of decisions to make, and in what order, and who may have assisted you in or not in those decisions.
In general, just to give a brief about what we have gone through during the last 25 years. Actually, we are working for 25 years in West Bank and Gaza and Palestine right now. And we have gone through too many things, at least 4 wars, too many clashes, all the time political crisis. In addition to the government salary crisis, it's something that no one normally faces because the government sometimes, most of the time, face crisis in securing cash needed in order to pay the government employee salaries, and which is considered an important part of the cash bump in the economy, actually. In addition to those, normally we are facing the worldwide international economic crisis and financial crisis and other things. That's why we face and live what others live overseas, and on the same time we have all the time our own crisis. That's why we have done too many things during the last 20 years to reduce the effect of any crisis, and normally we are well prepared, and we were expecting and considering ourselves expert in managing and working under crisis until we face COVID-19. It's a new thing for everyone. It's a different type of things for everyone everywhere. That's why, anyway, for us as Vitas, normally, as a result of our experience, we believe in the following, that we should never stop lending or disbursement, whatever happened. Our role always is to help the people and to be near them, whatever happens, especially during crisis. That's why when any crisis happened, immediately we start doing an assessment for our targeted group and clients. Actually, number one, to see how they have been affected, their needs. Some of them need sometimes kept cash in order to go back to work and to function. Some of them need a bridging loan or other help. And on the other side, we try to do an assessment for payment capacity in order to classify them and know how we should react with each category from those clients. Some of them has cash always, but they don't want to pay as a result of the crisis. So we put them in certain category and start following certain action. And this has helped us all the time to keep control over our portfolio, to manage to secure the minimum cash needed on us as inflows in order to continue functioning and serving our client in general. This is number one. Number two, always, we believe we should be well prepared before any crisis. That's why normally we make sure that we have enough cash, because cash, liquidity, is the most important during crisis. That's why always we have secure at least 6 months cash in our bank account. And I think from our experience with COVID-19 and uncertainty, we need 1 year at least. And I advise to have 1 year for everyone. This is number one. Number two, in addition to those things, we are making sure that we have all needed plans on the ground, which help us to manage and reduce risk and mitigate risk. That's why having like a risk management plan and the business continuity plan is very important for everyone under crisis. And those things help us a lot. I know that already well prepared and already proactive. We were proactive on these things. So we are already ready whenever anything happens to take the action and moving forward. In addition to those things, we have built internally the institution in a way to serve us well under the crisis. And this has actually helped us during COVID-19, like having the right infrastructure, the right IT infrastructure, like having laptops instead of desktops, so anyone can take his laptop and work from wherever he can, from home or from another location. Another thing, having things like UBS, like having 2 servers, the main server and alternative server that you can rely on whatever happened in the region of the main server. Too many things in this area. We should invest on it, yes, but it will save us a huge amount of time, money, and loss during a crisis. Another thing that we have done it, which is very important, to training our staff in advance to work under pressure. Actually, we live under pressure, so they are well prepared in this. But training our staff to work under pressure is very important, because frustration, confrontation with the client. Too many things happened during crisis. That's why they should be prepared, and they should have all customer service skills needed during crisis in order to serve our client and to be able to continue working without giving up at all during crisis. Those are, I think, very important things we need to do it. And one additional advice, hire the staff, it's better from the same geographic area that he's working in. So whenever there's movement restriction, he can still go to the field and serve the client. This is very important, I think, and things from the what we have done internally in order to at least react quickly, be responsive, proactive, and move in order to reduce and mitigate the risk and bring business back to normal.
Thank you, Ala. I guess one quick question I have is, what kind of training did you do with your employees? I mean, how did you actually carry that out? It's sort of it's important, but actually, how do you do it? Yes.
Frankly, we have done it internally related to some of the attitude and from the experience of people working on the ground. How to react during confrontation with the client, during tough times, in order to absorb any reaction, in order to be quiet and try not to let yourself be affected by the reaction of the client. Because you normally know under crisis, the client under a lot of pressure too. And they are suffering. And on the same time, if you can try to help them, or sometimes even put some pressure for collection, the reaction will be a little bit aggressive. So the staff should be prepared, ready. Another important thing which should be done, and we have done it internally, building loyalty. Loyal staff under crisis is the backbone of the institution. That's why building loyalty is very important by time, which makes the staff work harder, make sure that they give you whatever you need, and whatever the institution required from time, working, pressure, they will do their best to keep the institution successful and live. That's why these things very important, I think, and seems to be that the whole world, everywhere, there will be more pandemic, and maybe we'll suffer from new virus later stage. So we should be prepared and ready. And these things very important for us in order to continue working and serving our client and protecting our success. And I think keeping your success or continue being successful is harder than the success itself. So that's why we should be prepared.
No, wise words. And I think there were probably a lot of us who were caught unawares of, you know, the level of challenge and consequences of this current crisis, right? And I think we have a lot to learn from you and Vitas Palestine that have lived through multiple crises and have had to prepare in advance. I mean, you commented about business continuity plans. I think there were a lot of institutions out there in no particular region and nothing that did not have it, or had a very kind of, you know, general, but you know, those are the things that we need to learn, that we need to be ready for the next time, because regardless of what it is, what that crisis might be, you know, we're talking about crises that are unexpected. COVID might be the black swan of all crises, but there are going to be other ones like that. So great. Thank you very much for that. Let me turn now to Mr. Srinivasan to give us an overview of the major crisis that Spandana experienced several years ago. Over to you.
Thank you, Deb. Spandana was a different institution, and it was a different crisis in many ways. Comparatively, it was in a stable market. It was the second largest institution in India at that time. 4.2 million customers and assets under management, something like $630 million. When you look at crisis, some crises can creep in, some can crash down. I just divide crisis in two ways. Even COVID in a way is a creeping crisis, though the speed at which it creeps could be fast, slow, meaning there is some time to prepare certain things. A crashing down crisis, an earthquake, a flash flood, or say what happened to Spandana, state action preventing MFIs operating in their area of operation. Tonight, you get an instruction from the government, microfinance institutions cannot operate in the state except under conditions 1, 2, 3, whatever. These 1, 2, 3 are impossible conditions to fulfill. So Spandana faced a total seizure of its operations in a very significant province in which it had 50% share of its total assets and 50% share of its total clients. So the borrowers did not have a problem. The collection efficiency was 99 point something when this happened. So the borrowers were not unwilling to repay. There were no local issues. The MFI itself had excellent operation. It was one of the very low cost, cost efficient distributors. If you look at its return on assets in that year, it was 9%. Return on assets, I'm not talking about return on equity. Meaning, so this institution, when it had to practically stop 50% of its operations there, it had all kinds of problems. It is not cascading down. It is actually springing like a fountain upwards. The lenders, the investors, they think if 50% of your business is impacted, you can't service the loans, there will be a rating downgrade. So how do we continue to support you? So instead of even waiting for the loan maturity to play out, some people said, you foreclose the loan and give the money back to me. On the other side, the MFI can't collect money back in that state. And in those provinces where they can still operate, people think this company has a huge problem. So whether I will get my next loan, should I repay this loan? So it's state action of some kind. But again, there could be similar things that happen. The one part of this was the livelihoods were not impacted to begin with of the borrowers, whereas in several other cases, we see the livelihoods get impacted. Also the institutional strength, its ability gets impacted, then you have got one set of issues. But here, the livelihoods were not impacted immediately, but after a year when they could get no more loans, they got into several other issues. So it was a man-made disaster, a man-made crisis in several ways, though the government had its own logic in that province, why it brought in. So what could the MFI have done to begin with, apart from praying, which doesn't help much in financial sector crisis? So it tried one to keep the communication with the customers. Look, this is a problem that we will be able to sort out. We believe the regulator in the state yard, we will go to the financial sector regulator, the federal government or the court, we will try and sort it out. So let us keep communicating. The field staff could not travel out to customers' locations. That was the nature of the law, that you can't go and make a recovery there. The customer comes on his own to your office, he can take the money. Or you have to go to a designated place within a district. So the district place where they can go to invite the customer will be sometimes 50, 60 kilometers away from the customer's residence. So who will come? So they said, okay, we will keep the communication open with the customer in whatever manner. Retrain the employees that when it is possible to move into the field, they should be ready to do other things rather than marketing loans. Looking at the other part of the business, which is not in this affected province, other provinces, try to keep some amount of loaning going on so that people don't think this is going to close down, because that has a dynamic of its own. This is one set of issues that is relating to what they can do internally. The second is keeping communication open with the lenders. Look, if you want me not to do anything more, if you don't extend further facilities, you are guaranteed not to get any of your money back. Suppose you work with me, you might get whatever money I am able to collect back, because as an institution, we were exceptionally good, which is why 40 lenders had put money in this institution. More than about $400 million of borrowing they had, apart from about $90 million worth of equity and loan funds. The third is that they went over to the financial sector regulators, the Reserve Bank of India, to say, okay, can you actually offer some regulatory forbearance to suspend certain prudential requirements for a temporary time? Because this is not a problem we brought in. This is not a problem the customers brought in. This is a different problem. Actually, this is encroachment on your area of your jurisdiction by someone else. So can you? So a combination of these they try to work with all levels and then see how best they can do some amount of financial re-engineering to get out of the problem. So the solution was not with collection from the customer. It was also not, what do you call, doing something extraordinarily good from within the institution. It is about getting a forbearance from the regulator to extend the period for which the prudential norms will not apply, and then engaging with the lenders and others to re-engineer the repayments and other finances. Then the normal working of the institution started, through which they were able to come out. So I think I would stop here. I'll wait for questions.
Well, thank you, Mr. Srinivasan. We actually have a couple of questions from the audience that I would like to address. I think, what we've heard to date, and just in the overall description of the crisis and the decisions, is the importance to keep on lending, which sometimes you can do or sometimes you can't do. I mean, look what we're seeing right now, even with COVID, moratoria, et cetera. So those are, but I think in general, kind of being able to continue to meet your clients' needs where they are is really important. And I think one question that we have received from Govinda Rao of, sorry if I'm mispronouncing this, Muktingtha Bikas Bank, you probably know that, Srinivas, is the question is, and I'll first pose it to you, Alex, I think we talked about it, is there modification in service delivery methodologies which were taken, when this was happening? And if so, what were the changes? And you could actually think a little bit about what you're doing now. You talked a little bit about having local people, so they're there. I mean, I think a lot of institutions have suffered from that. Especially if they didn't have, digital lending capabilities. But can you address that question? Yes. And then I'll ask Mr. Srinivasan as well to answer. Go ahead.
Yeah. Let me tell you, before there was not too many actually tools in our hands in order to change what we are doing as a classical type of lending, which requires us to go to the field, meet with the client, and complete the whole process. In Vitas Palestine, at least during the last year, we have done very good things. Before the crisis, before COVID-19, we start moving toward digital product and start establishing and moving toward digital transformation fast. And this is very important things, and I think needed for us and for everyone for the future to face any crisis, because using digital product enable us to reduce our cost, because under crisis normally there will be always a pressure to reduce the interest rate and help people with reducing interest rate. So using digital channel mean less cost, less interest rate, number one. Number two, this is enable us to reach our client without, even while there's movement restriction and closures, they can just go online, submit their application, we can complete the process. And even if, until now, we don't have end-to-end product, because we don't have the law related to accepting electronic signature, but still, the last step only signing the contract, this is required. So we prepare everything until we have the chance to move to the field to sign the contract. What we have done too, we provide our branch manager with a printer inside their cars and all security measures, health security measures. So they are ready to move by their cars with a printer inside the car, linked to their car, to their battery actually. And they can bring the needed document and sign the agreement and go back. This is number one. That's why I think right now everyone have a chance by moving toward digital transformation and digital fintech and financial technology in order to start at least crossing some of the barriers and being able to help the client. And this will increase efficiency and keep your channel open with the client for collection and disbursement and with your staff too, which is very important things. That's why right now, even among the crises, we are using this digital channel to receive application and to move forward. My advice, never stop lending or collection. Our role is to work on the ground and to help people. Always during crisis, there's people have money and even making more profit. Even during COVID-19, some sectors has done much more money than normal. And always there's another part of people, they have some crises like they lost their cash and they need a working capital, like a bridging loan, and they will go back to work normally. That's why always we should find a way to continue working, dispersing money and collecting money. This is my advice.
Thank you. Thank you. And Mr. Srinivasan, how would you answer this question about modification on service delivery methodologies that took place?
I think because of the AP crisis, there were significant customer protection measures that the central bank brought in as a regulatory initiative. Even before that, the microfinance institutions had a voluntary code of conduct. Basically, these talked about how staff behave in the field with the customers, and how do you actually train the customers when they come into the system, and what kind of collection practices are supposed to be fair and good, and how transparent you are in communicating what are the terms of your loan contract to the customers. So there were quite a number of changes that came. But the more important parts of this was to look at what is the capacity of the customer to borrow and repay, how much he is indebted already, and in how many places. A very high loan or having multiple loans of small amounts, both of them introduce what we call the EMI pressure during the month. So a credit bureau reference-based verification of the customer became the norm after this crisis, just not in this province, just not in Spandana, across the country. So nobody who has 2 loans from MFIs will get a 3rd loan. And nobody who has X amount, this threshold is being reviewed and raised upwards. Beyond that threshold, the total loans cannot exceed. These kind of things came up. The second is that looking at the hesitation of people in groups to pay up on behalf of the group under the joint liability arrangement, many MFIs have voluntarily given up enforcing the group liability concept in its absolute, meaning if somebody doesn't turn up for a meeting, the lady doesn't pay, the other members try and pay up 1 installment, at best the 2nd. But then the MFI say, don't go beyond that. We will take her as a defaulter, we will deal with that separately. We don't want to burden the group with that because it will introduce a dynamic which is not good. Maybe all the 5 members in the group say, no, we will not pay at all. How long to pay up for this person? So this was one change which became positive. And of course, the interest rates were capped by the Reserve Bank after that. So all MFIs, they had to operate on an interest rate cap when it comes to offering loans. But very interestingly, many MFIs have moved far below the caps. The cap being 1, some MFIs might be charging as low as 8 or 9% below the cap today. Meaning they have passed on both operational efficiencies and reduced the cost of funds back to the customer. The point I'm making is the entire process, the loan structures, they are now geared towards telling the customer you are the most important person. This is what Allah was saying in other terms. So we are wanting in your interest and in our interest to continue the relationship forever. So this is how I think things have changed after that crisis.
Well, thank you very much. And actually, what you've done is tie together the 2 themes of today's Financial Inclusion Week, which is consumer protection and the future of financial inclusion and COVID. So thank you very much for doing that. But it just highlights, how interconnected this is and really how you treat your customer during these periods of crisis and understanding their needs as well. So Daniel, I'm going to pose a big question to you, and it actually comes from Mayada Elzogbi of CFI, our managing director, and that is, if you were to identify the most important driver of survival and success of these institutions, would it be leadership, governance, investor actions, or something else?
So maybe a really good crystal ball would help. But short of that,
Yeah.
but if you happen not to have that available, it's an interesting one. So for Viator, I would say what really made a big difference was the CEO, who was, at the time of the crisis, she just became CEO actually 2 months after the first devaluation. So she was a deputy, and for reasons completely unrelated to the crisis, the CEO of the institution was actually, his visa had been not renewed, and he was halfway around the world, and she had to step into his shoes. And I think the fact that she didn't have any of that baggage, she was not a founder, she was not there to try to sort of, protect the image. She was very open to change, and change was crucial. And that, so that made a really big difference. And I mean, if you look at the institution now versus what it was then, it's about a quarter of the size. That's a big change when you shrink to that level. Not every CEO is willing to go that far, but that's what they had to do. There was no other way. She was also, very willing to shift the types of lending that they did. She was also very willing to listen to the advice from the consultant who was brought on board, who did a lot of training, and I think that's an issue that Alam raised, and it was absolutely crucial in that case as well. Training the collections officers, which everything had been going well before then. They didn't really focus on it, and now all of a sudden they had to. So all of that, I think, stems from the fact that you had a manager who was willing to be open to change and kind of move in whatever direction she had to, given the situation. And I think there was a second factor in that particular case, which is that the creditors were pretty open to what Srinivasan mentioned, working with the institution. Sort of there were several rounds of essentially restructuring of the loans, and there was an intercreditor agreement reached, and that helped. They were open in two ways. On the one hand, they allowed the institution to retain a large portion of the cash flow so they could continue lending, because they could have had sort of insisted, no, you give us everything that you have, or most of it, and they didn't. And then the second, it can be difficult for investors to get together and make a decision jointly and reach that kind of intercreditor agreement. I know Srinivasan can probably talk a lot about what Spandana had to do. They had even more creditors, and it was even more complex. And if you see at other institutions where that is a factor, it is in fact a major factor. How well do you work with creditors is crucial. And it's on the one hand, it's on the creditors themselves to be willing to adjust. But on the other hand, it's also on the institution to be transparent and open and have that line of communication. What was really interesting in Viator's case is a lot of the creditors had investments in other institutions in Azerbaijan. And their experience with Viator was very positive compared to those other institutions in terms of how much information they were getting and how much transparency they were getting. And so that made them a lot more open and willing to renegotiate and restructure than they might otherwise have been. So I think in the case where you have bad news, it's always best to share bad news. And I've come across this in many other cases. This is not the only one, but that definitely came up in another case of an institution in Bosnia that we're still writing up. And if you go back to the original Weathering the Storm, there are quite a lot of cases where basically, when you are there hiding bad news, it's eventually going to come back and get you. And the institutions that actually failed in the original Weathering the Storm tended to be those. They tried to sort of present a better picture than was actually the case. And it was those that were sort of willing to say, no, things are really bad. Here's what's going on. Here's my path forward. And they were the ones who actually tended to pull through.
Thank you, Daniel. That's absolutely true. And I think that tees up kind of a question to you, Ala, which is, well, it's the same question in terms of the most important driver. Would it be leadership, governance, investors, action, or something else? And I want to add the something else. Talk to us a little bit about the role of policymakers and regulators. To what extent they played a role in your situations, and they probably have played a role in every crisis situation in Palestine. But tell us a little bit more about, out of all this ecosystem of actors, what was their role? And then, yes, please point out what you think is the most important driver of survival.
Okay. Anyway, let me tell you, according to my belief and experience, I believe having very strong, responsive leadership, and this is include not only CEO, include two senior managers inside every microfinance company. Having loyal, strong staff is a very important thing. And number one, I think. Number two, having very strong internal structure inside each company. Because let me tell you, during a crisis, sometimes we lose control and focus, and we give our attention to external problems and issues and collection and disbursement, while there's very important things during crisis you could face if you don't have internal audit, strong internal audit function, credit and risk and compliance function. Those are very important to have them, in addition to the normal thing that should be in every institution. I don't talk about it, but having the compliance, risk management function and internal audit, those very important during crisis, will open your eyes, will ring the bell whenever there's a problem here or there, when there's any violation for policy, because this could happen during crisis. This is number two. Number three, having very strong supportive board and investors, which is lenders for our case, most of them. This is very important. Like this crisis, COVID-19, I think many companies face major credit liquidity risk. And liquidity risk could at least cause or threat our existence at the end if we don't secure the enough cash required to cover our obligation and payments. That's why having responsive, supportive investors and board, sure, this is very important. We will face major crises normally. So that's why I think those are the most important things that could lead us or help us to go through any crisis and live the crisis and bring back business to normal. Going into the government and in general, I think not only in Palestine, everywhere during crisis, normally government will try to take action and decision to help people because they are in deep crisis. And sometimes they don't think about the reaction of their decision about the financial sector. This is the major problem. Like for us, there was a request to defer around 4 to 6 payments for all clients. And that's mean you don't have cash inflow at all. And on the same time, we have cash outflow, like for lenders, millions. Like for us, there was around 4 or 5 millions due for us to be paid during the same period. But thanks God, we have a very supportive, some of the very supportive lenders that immediately they shown up, supported us, and we go through it. And we have reserve of cash as normal. But yes, sometimes government and regulator take decision and sure they need, and behind this decision is the desire to help people. But sometimes this is affect us because we are not strong anyway like the banks. That's why, from my experience, it's very important to keep open doors, open communication channel, and very good relation with officials, politicians, and central banks, and try always to do lobbying and try to, in every start of any crisis, to start lobbying in order to avoid taking decisions that could destroy your company. So this is very important. And frankly, let me tell you, everywhere we should always do public awareness about the microfinance sector and educating the people the importance of the microfinance sector. Why our interest rate is high, what we are doing, how we are helping people, why if we disappear, no one will help those people, that because banks will not go to help them or others. That's why I think those are very important things we learn it during time, and we try to do it, but always there's surprises here and there, sure.
Thank you. And I think your comment about the open communication is really important, and the transparency that Daniel talked about, because I think what we're seeing now with COVID is that this is a situation where it's global. And so you have so many parties that need to be informed, so much information that even with the best of intentions, there's probably going to be a lack of transparency just because you don't even know who you should be talking to or in what order, et cetera. So I think that is a really key takeaway, and I think one of the reasons why there have been attempts and coordinating efforts to respond to this because of the number of parties that are involved, and microfinance and financial inclusion, all the players it's just so much bigger than it was before in some of these past crises. So yeah, I think there's a lot to learn in that sense. Let me turn it over to you, Mr. Srinivasan, to answer the question about the most important driver of survival and success: leadership, governance, investor actions, or something else. And I would like you to touch upon the important role that equity investors played, because I know right now we are thinking a lot about creditors. I mean, obviously liquidity, very important, but long-term solvency in some of these cases, especially in these very large market situation, market crisis level. You know, what did you see in Spandana? What have you seen in India?
Yeah. Yeah, I think a very short answer to the question is have lots of capital and lots of liquidity. I talked about 1 year liquidity now. Right now, even during COVID, I chair a company which is doing financing in agricultural value chains. So at the peak, we had 6 months liquidity. Now we are slowly drawing it down because we are finding ground level situation is better. Suppliers are willing to put money. So you want loads of capital. Yeah, you have to have investors, number one. Number two, we also require patient investors who would permit you to redeploy surpluses back in business and build up the net worth rather than having it distributed. Sometimes what happens in the early stage of an MFI is that you say, I have become sustainable and I am profitable. I want to celebrate by declaring a dividend. It's like a child saying, I'm able to now stand up. Can I now try the 100 meters sprint or something? This is one thing. So how do you get access to capital and build a capital base which is necessary for maybe next 5 years? Don't think about, okay, I have enough money to do something till the end of this year. If you do that, then you are a prime, what do you call, thing that will fall victim to any small crisis. This is point one. Liquidity, it follows how much of capital you have. If you are adequately capitalized, lenders are willing to look at, okay, you are a fairly strong institution, you've got good investor backing. But these two do not come without the other things you asked about. If there is good leadership, Padmaja in Spandana, she was so committed, she was so perseverant in the midst of the crisis. She did not look here or there. There were a number of institutions who said, look, if this works, it works. Otherwise, I will leave it here and go. Some of the smaller, medium, she stuck to it. She went to everybody. She talked to the investor. She talked to the lender. She talked to the Reserve Bank. She talked to the government. The perseverance, the kind of spirit that she showed that she's totally going to take this organization forward, come what may, that brought in quite a bit of support to her. And subsequent to the support, she stuck to the job, showed her staff, showed the external stakeholders that they are going to get it done. So within 2 years of this massive problem, they could post significant operational surplus. Though the amount that she had to write down because of the large amount of NPA, that was a different thing, but they could show operational surplus. And that is what attracted fresh equity later from new investors. That's how the institution came up. And she could successfully go to the capital market, do an initial public offer. From severe crisis, from the ICU with ventilator to be running the marathon within, say, 6.5 years. It's a tremendous achievement. It's about leadership and also the fact that she invested in good quality governance. The points Allah made about transparent communication, putting the bad news out, and not compromising on, okay, if these are the things to be done the hard way, we will do that. And telling people who had all the, what do you call, debts due and callable after restructuring, saying that, look, I won't be able to pay because I cannot collect enough. If you give me a fresh loan, however, we can speed up repayments after 1 year. She negotiated a fresh loan even while failing to repay current commitment. That was the kind of credo she had. But then beyond the leadership, the good governance, capital comes in only when you have got a reasonably stable regulatory structure that's predictable, that's fair, that looks at the balancing interests of all the stakeholders. Doesn't load it in favor of, say, investors, or load it in favor of customers, or in favor of the MFI. Look, all of you have to operate if people on the ground should get their services. So a regulatory system which balances out these things, that's important, which is what happened post the crisis, that several things regulatorily got settled. If I look at qualitatively the kind of equity investors that came post-crisis, say I would say 2013 onwards, you find rather large PE players and DFIs came in large numbers, putting in large tickets in MFIs. Compared to the pre-crisis situation, lots of venture capitalists came in, some impact investors came in, but then there was a huge shift post the crisis in terms of who came in and what kind of money they were willing to bring in. And they also saw good MFIs can actually go to the market and became public listed institutions. So I think there is no short answer to that. Like Daniel was saying, if you have a crystal ball, not one, 3 or 4, then looking at which combination of leadership, governance, a good stable regulation will bring in additional capital, on the strength of which more lenders will actually come in. Yeah, but then beyond all this is how the institution actually responds to a crisis. Does it appreciate the crisis well enough? So yeah, I think, of course, there are lessons that come that we will talk to maybe.
No, thank you. That's super helpful. And I mean, I know we've got only about 5 minutes left, and I just want to first of all tell you that we will be publishing all of the case studies online, in short order. We already have our Viator case up, so we will be putting a link for you to be able to access the Viator case. And I guess what, just listening to the last conversation, I'd like to get a final takeaway from each one of you. And I am thinking a little bit about what you were saying, everyone's been saying about the ability to talk to the regulators, and just how Padma Reddy kind of kept going and kept going. And it's like, beating your head against the wall and continue to do it. How do you do this now in COVID? Because it's like everyone's going to be knocking on the door, so how, this is, such a much bigger problem. How do you do it? In what way should there be a more coordinated response? Sort of thinking, if someone walks away from this webinar, think, okay, what can I do? What can we do? Given the current situation, from what we understand, and every place is different, but what would you recommend? What would be some words of advice? And I'll go to you first, Daniel.
Sure. So I think one thing that I'd keep in mind is no matter how bad the situation gets, and it can indeed get very bad, there's still a path forward. So I think this notion is like, oh my God, I have 3/4 of my clients are not paying their loans. That's it. I'm closing shop. It's like, no, institutions have survived this. It is possible. And not through some magic, not through some, bailout from somewhere else. You can actually get through it. You just have to be open to what it takes. So that's kind of internally. In terms of coordination, I think you have to be open to what kind of problem am I trying to solve. If you're dealing with issues having to do with investor relationships, obviously you need to be talking to all the investors. The investors themselves are talking to each other as well. So there are those initiatives in place. And I don't know that if you're just an FSP, you probably don't have a whole lot of control over what the investors do, other than just be transparent and be clear about where you are and what you need. But I think from the investor standpoint, they're hearing the same stories from multiple institutions. If you can stand out and be that transparent institution that's clear about their situation, then you'll do better. And the third part I would mention is, and I know this is happening in several countries, I know in the Philippines this has been going on, where because it is a nationwide crisis or a global crisis, but in each country it's national, it makes a lot of sense to band together, work with an association, if one exists in the country, in order to lobby with the government and with the regulator. Because indeed, the government isn't going to make one-off decisions. It doesn't make sense. So just kind of understand, okay, what is it that's needed? Is it forbearance? What kind of forbearance? Is it some sort of external support for some clients? I mean, there are different kind of things. Depends a lot on each country. In some cases, it may be, hey, you've done this regulation, that regulation is great for banks, but you forgot about us, the MFIs, and now we're squeezed in the middle. It depends on where you are, but the notion that conversation should be had at the sort of the association level is I think really crucial.
Thank you, Daniel. And just briefly, Ala, and then Mr. Srinivasan, what word of advice do you have?
Frankly, as Daniel has said, it's very important to go through a union or association in charge of the whole sector, because normally, as you have said, central bank will not listen to everyone during crisis. They are very busy everywhere. That's why it's better to go as a group, talking about the crisis and the problem, and start from the first step, even before the consequences of the crisis started and the decision is taken. This is better always to be proactive in order to let them know what will affect you if such a decision, because normally we expect what could happen. So this is classical, in addition to using the board level and the responsive board and using the personal relation and communication with the BMA indirectly through lobbying and talking. This will benefit the whole sector. That's from my side.
Thank you, Alex. Mr. Srinivasan, final words.
I guess in case of microfinance, the regulator should only know by giving small amounts of support, they could actually relieve problems of a large section of population because of the distribution effect. But then when a crisis hits, you cannot go and take a huge Excel sheet and show them that. This is where the role of associations and unions of whatever is in the country, they have to bring out this database regularly, put it up to the regulator, and whenever there is a chance, the regulator comes and participates some of the events, make them know. Similarly to the government. Look, this much of money, this many millions of people are having right now, and so many we are actually dealing with. When a crisis hits, you tell them, look, this many people, they will suffer. All we require is only a small amount of support compared to what you would give to big industry or large economy. If you do that, you will keep millions of people more safe and stable. This is a fairly effective communication, but you can't start the communication when you have the problem.
Yeah.
You should be on friendly terms with the local policeman, local postman, local firefighter. Then you can make a phone call and they come when you have a problem. You don't do that only when you have a problem actually.
Yeah.
So this was one of the things. Second, I think a slightly different point, not on this, is if the CEO or the board, they face a crisis which they have not dealt with earlier, which they are not familiar, they should assume the crisis as it looks is much larger and plan for that. Don't think you know the crisis. It may be just the tip of the iceberg, or it is half of it is above, half below. You do not know what's lying under the water. You assume it is larger, so plan larger. And then girdle yourself for the longer term. In COVID, I know lots of institutions, they thought short term, maybe influenced by US or whatever. Now they are also having the second, third level of spread in terms of impact on the institution.
Yeah, I think that's a very fair. I mean, and that's, I think, applicable to all of us. We're all apt to have magical thinking. I think all of us have had that with respect to COVID. But it's very important, particularly for the board, not to have magical thinking in dealing with this. So I want to thank all of you very much for joining us on this conversation. It's very timely, very important, and thank you. And I encourage everyone on this call to be tuning into other sessions of Financial Inclusion Week. I hope you have had the opportunity to do so, and there will be recordings, so if you can't, you can join later. So thank you all very much, and have a good weekend. Take care.
Thank you, Deb.
Thank you.
Bye, Deb.
Thank you, Ala. Thank you, Daniel.
Thank you, everyone.
Thank you. Thank you.
Bye.